Well, for more on the trade negotiations between China and the United States, I'm joined by John Quelch, live from Miami. He's Dean of the University of Miami's Business School. Thank you for joining us.
Good evening, Rachelle.
So let's take a look at the trade picture. First off, what should we read into this new foreign trade data coming out of China?
The January statistics are obviously very favorable in terms of a jump in Chinese exports, but as your reporter said a few minutes ago, we attribute a considerable proportion of this to front-end loading by U.S. customers concerned about the possibility of the tariffs going into effect in on March 2, and accordingly wanting to hedge their bets on that by advance ordering of their needs for later in the spring.
So we did see that China's trade surplus with the U.S. narrowed and U.S. exports to China fell more than 40%. Can we expect this trend to continue as the trade talks continue?
Well, I think everything depends on what happens in terms of the announcement that is inevitably coming on March 1st. If there is an interim arrangement that can essentially tell the markets that things are well in hand, that the negotiations are going well, that there are some agreements that have been made already, and that there's a roadmap for concluding the talks successfully, then I think we won't see the reduction in imports from the U.S. that we've seen in the last set of statistics. But it does show to U.S. suppliers how quickly the Chinese economy and Chinese buyers can react when there is turbulence in the relationship.
Because there does seem to be this issue when it comes to the pace of reforms of China opening up and the U.S. really wanting to see sort of instant results. What sort of an issue do you think this differing in pace is going to have on the talks?
Well, I think instant results may be a little bit unfair. The U.S. has been pressing, as have other Western countries, have been pressing for many structural market and investment reforms in China for many years, and they have received reassurances. Often regulations have been put in place in China, but for whatever reason, there hasn't been a satisfaction level on the part of the U.S. administration of President Trump that these assurances and these regulations have actually bitten in terms of the impact that they've had on improving the investment climate, level playing field climate for U.S. companies. And so we have reached a little bit of we've come to a head here. The U.S. is finally saying enough of the continuous reassurances. We really want to see tangible results, and we want to see some teeth put into the negotiations and the agreements that kick in tariffs or whatever conditions may be applied in the event that the latest guarantees from China don't come through to fruition. I would just say one other thing, Rachelle, if I might, and that is that, President Xi Jinping has been talking about market reform. He's been talking about improving access to the Chinese economy. Many of the objectives that the United States has for its relationship commercially with China are consistent with the objectives in the 5-year plan. So I think there is a very strong basis for coming to an agreement with enough teeth that we won't get into a vicious and downward spiraling trade war.
Now, I do want to look at this issue of how this is impacting both economies. There's a U.S. business group coalition called Tariffs Hurt the Heartland, and they basically do a monthly tracking of the impact of tariffs. And they said that in November, the tariffs cost U.S. businesses $2.7 billion. And we also have the IMF, other organizations, really giving dire warnings about really the need to resolve this. So just how urgent is this for both economies, as well as their global supply chains, to reach a deal sooner rather than later?
It really is urgent. I've been saying consistently for the last 2 months that a failure to come to an arrangement, an accord, by March 1 will result in a considerable downdraft in markets worldwide, not just because of the economic implications of that, but more importantly because it will reveal that the two major powers in the world today are not able to come to an agreement on economic issues that are perhaps easier to reach an agreement on than important security and political issues that relate to the Korean Peninsula, the South China Sea, etc. And it's very important for the security of the world going forward that the political issues be negotiated as well as the economic. If the economic can't be negotiated, then it really does raise the political risk level, I think, for the global economy.
All right, John Quelch, there, Dean of the University of Miami's Business School. Thank you so much.